can use it now to build your wealth, more or less. So you can take the extra fund or the extra amount in your emergency fund to start now building or investing in other opportunities that we mentioned in the first slide. You can decide to go into, I don't know, shares if you have the appetite. You can decide to go into property. You can decide to go into bonds and such like. You have the capacity to take on more risk.
Yes, thank you for your in-depth presentation. I'm on trust fund against a will. If there is a will, and then one goes also for trust fund, how do they work? Are they not going to be in conflict? Secondly, are there financial institutions which run trust funds? And what is the minimum?
Thank you for that. So for a trust fund, it tries to complement a will. So you can actually give the trust fund manager the instruction to execute your will. So it's basically a will, but the challenge we've seen with wills is sometimes they are contested, like we've seen in very famous cases. But for a will, for a trust fund, you already have a trust fund manager. Most of the time, these trust fund managers are more or less legal professionals, okay? And what we've seen is for trust funds, it actually cannot be contested because it's more or less the instructions that you've defined quite clearly. So there aren't many avenues to contest the instructions in a trust fund. The financial institutions that I know of, I know Britam has such services of a trust fund. I know of another insurance company that also offers it. So basically the way it works in our company, you can have a cash trust. So for example, you can say if you have a pension and something happens to you, you can set your beneficiary as a trust fund. So if something happens, unfortunate incident, the trust fund manager, the good thing is they usually also follow up in case you have your wealth and you've told them the list of wealth that you want to fit into your trust fund in case anything happens, they'll be able to follow up. So if it's a pension fund, for example, I don't know if it's your savings in a bank, they'll be able to follow up with the bank and consolidate all your estate in one pot. And from there, manage the estate the way that you've defined it. So the trust is more or less in the trust fund manager and the ability to actually execute the instructions that you've given. Because for a will, sometimes, like I mentioned, it can be contested. So I think the major difference is between whether it can be contested or not.
Maybe you can highlight us on how maybe money which is in the bank account of a deceased can be assessed by the beneficiaries. Maybe they were not even aware of it. And secondly, money which has been forwarded to the unclaimed assets, what is the procedure to claim it?
Thank you. So for money that is not claimed for a certain period of time, the banks actually have an obligation to send into the Unclaimed Financial Assets Authority. So typically before they do this, ideally a financial institution should make attempts to reach the beneficiary or the client, ideally. So if the attempts are unsuccessful, of course, the money is sent to the Unclaimed Financial Assets Authority. So I don't have experience per se directly in someone who has managed to follow up such unclaimed financial assets. But typically, I think they usually publish the names of the beneficiaries or the owners of the assets when they get to the Unclaimed Financial Assets Authority, so that they can try and follow up. So there I'm not too sure about the process of claiming from Unclaimed Financial Assets Authority. My assumption is that it might be more difficult than probably you approaching the financial institution to access it directly. So there I'm not, to be honest, I'm not too sure of the process. But I imagine it may require a bit more steps in terms of verification and making sure that you are the owner of these particular assets.
Allow me to complement what is said. Funds that are moved to Unclaimed Assets Authority, the first step you need to take is go back to the institution that transferred the funds to UFA, fill in the relevant documents, forward it to them. Once you forward the documents to the institution, they liaise with UFA, initiate the process. Once the process is initiated, you may have to wait a little bit before the funds are remitted back into your account. But essentially what happens is that it takes about 5 years if it's a bank account. If it remains dormant for 5 years, then the financial institution, be it a fund manager like Britam, be it an insurance company for a maturity, or be it a bank, after 5 years, they are legally required to make returns and ensure that those funds are transferred to Unclaimed Assets Authority. So the process starts with the institution. You fill in the relevant documents and then they file them with UFA. Thank you.
Yeah, thanks. Thanks for that. Yeah, I think I've taken all the questions. Oh, yes. So for succession planning, I think for me, I'll still insist on the consideration of a trust. I mean, like I mentioned, wills are usually contested. So for me, if you are considering maybe what your estate will happen after you pass on, you can consider the benefits of a trust. So you can talk to a financial provider who has such solutions and see how that can plug into your estate or financial wellness. So it's another critical or important area that we've seen. It's very popular, especially in India, in South Africa, but in Kenya, it hasn't been very popular. But it's from the sessions that I've had with the team on trust funds, I find it to be a very optimal way and efficient way, and also cost-effective way. Because another benefit of this trust fund is, even while the cash is with this trust fund manager, it's actually invested in a particular fund. So it continues earning. If it's cash or a liquid asset, it actually continues earning income. So it's not just left aside without earning any interest. So it also has that benefit of earning an income. So you can think about a trust fund for your estate. It's actually very beneficial. You can also talk to Esther. I think she's able to, and Vincent as well. They'll be able to give much more breakdown and detail.
Than what banks are transacting, and that's just a portion of what we're ignoring. So a lot of funds move from M-Pesa to Unclaimed Assets Authority, whereas our children and our other dependents are struggling. A lot of money, some of us might have purchased life insurance policies meant to educate our children, but we did not disclose to those who should use those funds to educate the children. So today the children are struggling, but after some time the funds will move to Unclaimed Assets Authority. The same also happens to banks. So really, the next thing is also our inability to consistently update our records. If you had named somebody as a beneficiary and your interest changed at some point, it's important to go back and do what? And change. I'm sure there's a time banks were compelling us to provide details of our next of kin on our bank accounts. And I'm sure among us men here today, how many of us took the initiative to do that? So if majority of us did not take the initiative to do that, the bigger picture is what would happen in case we are not there. It might not just necessarily be death, but it could also be total and permanent disability. It could be due to critical illness. Equally, it could be due to accident. Nobody knows. So the money is there, but it cannot be used. I'm sure if you would talk to us more about succession, the moment money is left into a bank, and you are the account holder, the first thing that banks do is restrict that account. So it goes through a painful process of what? Succession. Sometimes it can be so painful, the children are struggling, and the how to access that fund is left to the courts to decide. Until such a time when succession and all the interested parties' interests are taken care of, that is when unlimited access to that fund is provided. So really what is important is disclosure.
Yes, from my experience, Mr. Mongela, what I have seen in my practice is because the way the men are being treated at home by their spouses and their children. So you have decided that because it's as if they want me to quit, I will make sure you guys, you'll never know what I own. I remember you saw, I don't know whether you saw in the Daily Nation, sometimes back when James Kanyotu died. You remember James Kanyotu, this niece, the special branch. He was so rich, but they ended to advertise in the Daily Nation, in the Standard newspaper, telling people, if you know Kanyotu's properties, kindly come forward and tell us so that we can include the properties in the succession. He was so secretive even to his death. And I suspect this is because of the way he was being treated at home. So, gentlemen, I think the problem is not men, it's the problem is the people who are so close to us. So then I'll say, if, for instance, you'll be benefiting from my own sweat and you are celebrating upon my demise, why the hell should I inform you what I own? I should not. I'm not obligated. Let me, if I go, well and good. If you find it after I've gone, well and good. Because I've seen some sons, actually, handling some cases where they have killed their parents because of what they own. Actual cases I'm handling in my office. They cause your own death because you are better dead because they will benefit. When you are alive, you are protecting your own properties. So that's why some of these properties are going to unclaimed assets authority, because of what we are going through in our own families. Not necessarily our own problems, but I believe those closest to us, the way they are treating us men.
Does that open up another debate?
Robert, thank you very much for sharing your knowledge with us. Perhaps it's important for us to be real and we remember where we come from. The concept of creating an emergency funds assumes this is successful from an environment when we have resources. Increasingly, it is very clear in the environment we live, our expenses are more than the resources we get. So could you comment, when my resources are kidogo, where does the idea of emergency fund creation comes from? Statistics tells us probably over 80% of our population are living $1 a day or even below. So do you think what you are preaching is reaching the 80%? Thank you.
Thank you. A quick question. You spoke about wills and why wills are not respected in Kenya. What does that mean? Does it mean that Kenyans don't like writing wills, and those who write wills, the wills are not taken with the seriousness that it deserves? It's common knowledge that, of course, most of us don't like writing wills. We think that when we write wills, we are going to die the next day. But that's not the case. Kindly.
Thank you. Mine is still a follow-up on the Hoofer. In case a family is left by, a relative, and they suspect this relative had, some property or, funds. I heard Bwana Mulumbi say, normally, funds are transferred to Hoofer after 5 years. 5 years. How do they know? Can they go to Hoofer, or what do they do? Or they just wait and do? Because actually I saw the government, advertising that they have, those funds are there. How do people know?
Before we take the next question, Wakili, you can comment about the legislation that requires financial institutions to do returns to Hoofer after a certain period of time.
Yes, it is a legal requirement that you have to give that information to the government, that there is this kind of assets which are being unclaimed in regard to a particular deceased person. Then from there, then that claims authority then now should get in touch with wherever the money came from and tell to look for some of the relatives or beneficiaries, because normally you are supposed to have some kind of beneficiaries involved. Even when you open a bank account, there are some people you usually indicate as your beneficiary. So that institution is the one who is supposed to get in touch with the beneficiaries, tell them, look, this gentleman or whoever it is left these kind of things, and they, because of the time period, they are already being surrendered to the unclaimed authority. So then now you can follow up. It's supposed to be it's a duty imposed by the law upon these institutions which keep people's properties or monies. Is their duty.
Yes. Okay.
Maybe this is a follow-up to what Wakili has said about how men are treated by their immediate family. Now, there are cases where maybe they will impose caveats on sale of properties. Maybe how can that be challenged, or is it valid for the years where you have put the caveat?
Thank you for the questions, and I hope we are still, I know we are close to lunch, bado hatujamaliza, but I hope you are still vibrant and active. I wanted us to stretch a bit, but sijui kama to stretch kidogo ama tuendelee tu. Tuendelee tuko sawa? Haya, we are about to have a break in a few, so we are still good. So for the reality in Kenya that is true. Our expenses, for most people don't earn significant amounts of money. Sometimes our expenses are more than our income. But I think we can focus on what we can control. First thing we need to ask ourselves is, can you control your expenses in reality? If you want to achieve financial freedom and financial wellness, or meet your financial goals, the truth is you do need to make a bit more difficult decisions. Even as men, because we are here, you need to make difficult financial decisions. You need to decide which areas you need to cut if you are not earning a lot of money. But number one, you need to know what your expenses are, okay? So where is your money going? You need to take control of that. So in as much as most of our population don't earn as much, what I'd encourage us is take the deliberate step and deliberate action, okay? What do you want to achieve? What are your financial goals? Are they achievable? And if they are, you need to make those steps towards achieving that financial goal. It may not be easy or simple to do, but you need to take that deliberate action towards it. So if it means making some difficult decisions or sacrifices to meet your financial goals, I'd encourage you to take such difficult financial decisions. It's usually not easy to meet your financial goals, but eventually once you start taking this disciplined approach or start taking these steps, eventually after time, it becomes much easier after time. So I don't think we really have an option. We definitely have to ensure we have our financial wellness in check. So we do need to make the difficult decisions, whether it's to try and find a way to increase your income or to cut on unnecessary expenditure. So it's a decision that you have to consider and think about it on an individual level and make those deliberate decisions. The question on wills, why are wills not respected in Kenya? I think, I don't know whether I can rely on your experience, Wakili, to tell us from your experience. I don't know whether you've seen, but from what I've seen in Kenya, I think sometimes it's due to, I don't know whether the will is not written in a legal way or whether legal matters take precedent over or much more force over a will. I'm not sure, to be honest. I don't know whether, Wakili, you have any views on it?
Yes, normally wills are contested where a beneficiary has not been provided for. If you look at Section 6 of CAF 8, Laws of Kenya, that is the Law of Succession Act, you can contest a will on the basis that your interests were not covered. But once you contest, then you have to adduce evidence to show that although I'm entitled, I was not provided for, because, you know, it is somebody's properties bequeathing you for no reason at all. So now you have really, the only danger we have there is that whoever was trying to do the will is no longer there to give reasons why he did not provide for you. The one I did in the court of law was where one of the mzees from Muranga did not provide for her son. And the reason was that the son was always taking him to court on various other matters, and so he did not provide for him, he provided for the others. So eventually the High Court judge found that the mzee, that is the deceased, was justified in failing to provide for you. Because, you know, remember, you are not obligated to give anybody anything of you which belongs to you. You can even give to charity, actually, and even don't even give your children. So now it all depends on the facts of the matter, and the judge will decide whether or not you are entitled, you are not entitled. But basically, they are usually contested, basically because somebody feels that I was not given a proper share, and maybe so-and-so was favored or whatever it is. But you remember, this is a personal choice. The children like Mulumbi you have, you are not obligated to give them on equal basis, isn't it? Because that's your property. Why can't they wait for to look for their own money? Why should they always say, mzee aliniachia kidogo, akapatia the other one so much? But it depends from one case to another. The judge will decide on the facts of the matter, but you are not obligated, actually legally, to give anything to anybody.
Another debate?
swali pale.
It's a question. No, it's not a question. It's a comment. Okay. I want to make a comment on the session that he has covered. I've scribbled it down. Bonnie, that's the best time to start, and the best time is now. When you wait, the opportunity time never comes. You start with what you have. That is the Moses principle we learned somewhere. You are disciplined, save daily, rain on spending, consistency. Small consistent acts like saving daily will have impact than huge sprint. You set financial goals, invest in financial literacy, set an emergency fund, have a spending plan, cut on unnecessary expenses, but try to understand yourself. Identify what are your triggers for impulse purchases. Is it the company that you are keeping? Because in the other group for Man-Up, we say you keep company, but the question is you work with company. But the question I heard someone say is, who is working with you? It's better to work alone than with a fool. Proverbs 13:20, walk with wise, become wise. Companion of fool will suffer harm. Have a budget and stick to it. Most wealthy people are not those who earn the most or from the rich background, but they are those who manage the best. Today's decision will affect tomorrow. So financial success will be like one day you sit and know that you have space in your bank account because of the choices you are making today. You are able to make charitable contributions without looking at your bank account balance. Once you get money, don't let it go. Learn to invest and make it grow, make it bring return. But remember, you are your character, you are your values, not the money. You are your friendship. If all goes, this is what will keep you going.
Thank you so much for that. That's a very good summary. Hata anafaa upigiwe makofi hata.
Si wanaume tumwangushie.
Yeah, thank you so much. That's a very good summary and good way to end the session, unless there is any other question. I don't know. But it summarized very, very well on the session that we've just had. And is introduction to digital assets. This is blockchain and cryptocurrency simplified. So we've seen a very interesting trend. Cryptocurrency has been around for quite a while, but of late imepata more popularity because of how well it's performed and adoption, especially in the US and other major currencies. So we'll try and give the basics and investment overview of blockchain and cryptocurrency. Then we'll talk about the risks and the securities that are there. I will look at it from an investment perspective and take any questions. So it's a very broad topic, but I'll try and give the basics first, and then from there I think we can pick up and see where the conversation goes. So what is cryptocurrency? So let's start with the basics. So it is a type of digital or virtual currency that uses cryptography for security. So what is this cryptography? It is the science of protecting information by transforming it into a secure format that only intended recipients can understand. So let me just go into a bit more detail in terms of cryptocurrency. So the intention from the first paper that was written on Bitcoin from a person who still remains anonymous is it was an intention to have a currency that is not controlled by any issuer. So for example, our Kenya shilling is controlled by the government through the central banks, India. So the Kenya shilling is not particularly in as much as you have the legal tender of carry the Kenya shilling, essentially it's not yours. The government can come and take it. So what this person tried to do is to have a currency or a token where there is no single issuer. So the way he went about thinking about it is, this currency ndio ikuwe imekubaliwa ati wewe uko na hii token. For example, if you say Wakili has this token, in this room we all have to agree that this token was transferred to Wakili and no one should be in contention. So there's usually one digital record that is accessible and transparent in the blockchain that everyone can see and cannot more or less be broken. So whenever a transaction is carried out, all computers in the network update that transaction in that blockchain, that this token has been transferred to Wakili and Wakili is the owner. So everyone has that book of record that shows that Wakili has that token. If it transferred to someone else, that record is updated again. So there is no contention that a particular person has ownership of that token or that instrument. And because no one has control over it, it's more or less controlled by a network of computers through updating of this record systematically, then there is no central authority that controls. So as long as you have your password, no one can come and take your, more or less the token. So there are certain security features that are put in place to make sure that not all records can be, and because there are many records across many computers, you'll have to have the ability to adjust the records in all computers. But the system is set up in such a way that it's very difficult for you to actually do that. So just to summarize how it works, it runs on blockchain technology that has a digital record that records every transaction across all computers. So all transactions across all networks are updated. So here number one. Once a record is in place, it cannot be deleted. So if the token is yours, it's been transferred to you, no one can more or less dispute that. And number three, it's transparent, so anyone can audit it. But it has features in place such that you can't know the identity of the person, you can only see the keys. So why is it so popular as cryptocurrency? So because it's not controlled by any particular government, it's become very popular with, especially for example, if a crisis happens, you can be confident that if you put your assets there or your value there, at least no one will dispute it. So that's why it's very popular. Number two is that has an element of privacy. So in as much as the record is there, mtu wajui ati wewe ndio uko na pesa. For example, if you have your money right now in your bank account or M-Pesa, of course the bank officials know that you have your money, so it's not really private. The M-Pesa, people in M-Pesa know. The government, if they want, wanaweza enda tu kwa waitishe this information, I'm sure, and they'll just know. But if you have if you have your individual key and you have not told anyone this is your key, no one can really track or know whether this token is yours. So that's another reason why it's popular. Number three, it's because of fast transactions. So you can send someone this token, whether it's a Bitcoin or whatever it is. If someone has a wallet in US or UK or wherever it is, you can send it instantly. But for us, of course, for Kenya, you have to find other means. I don't know, Western Union or whatever it is. I don't know what is used these days, but it's a bit easier if you use this type of technology compared to other technology. Then the main point, I think, is because of investment. Because over the years, Bitcoin has performed very well. I think it's been very popular as an investment avenue. But we'll talk about the risks that this presents. In as much as it's performed very well, there are also some risks that you need to consider. So what are some of the risks that you see? So the chart that you see there is the movement of the price of a Bitcoin over the years since just before 2017 all the way to Jana. I think yesterday it was at $110,000 for one Bitcoin. So over the years, you'll see in 2017, it was just around, I think, less than $1. Then it went in 2018, it went up, then ikaanguka tena, 2019 up, 2021 up, down. So you'll see it's very volatile. So it's a volatile currency or a volatile investment. So that's one of the things that you need to keep in mind. It's so volatile that I think in 1 week you can lose even 50% movement in your currency. And just to give you perspective, for shares in the Nairobi All Share Index, the share price cannot move more than 10% of its value. So if it's 10 shillings, it can't go to 12 shillings unless there is a major announcement. But usually on a normal day, there is a cap on how the price moves. But for cryptocurrency, because it's not regulated more or less, that's another key feature of it. It can move to any price. So you can get rich in overnight, or you can lose your value again overnight. Another key risk that you need to consider is regulation. So it's not a space that is regulated. Like I mentioned, there is no single issuer for some of these major cryptocurrencies, such as Bitcoin. So the regulation around it is not very, I describe it as up to scratch. It's very difficult to regulate this space. You can have a bit of regulation for some of the key players, such as the exchanges where these things trade. You can probably have some regulations around such exchanges. But generally, it's a space that has been a bit difficult to regulate. I think in Kenya, actually, I don't think it's regulated. The CBK actually, I think some time back, issued a statement, more or less telling the people who are buying, it's at your own risk. So it's not something that the CBK can step in, or CMA, in case you invest in. So in terms of regulation, you cannot have any reprieve in case you lose your money, because again, it's not regulated. Number three, because of this, no regulation and a lot of anonymity, it's a space where there's been a lot of scams. It does have its fair share of fraud and scams. So if you are hacked, for example, and your money is lost, it's very difficult to follow up these funds. So what scammers will try and do is to try and know your private key. So usually, especially for Bitcoin, you have two keys: the public key, where people can send you money, and you have the private key, which is more or less the code that you need to give if you want to transfer this cryptocurrency. So once a person knows your private key, they can access your wallet and make transfers. So scammers are really keen to try and get this private key. So it's it's a space where scams are very prevalent. So if they're able to access this, again, you can't know where your money went. For example, if M-Pesa, you send money to the wrong account today, at least you can reverse. And if you can't reverse, you know where the money you sent it to, you can try and follow up. But for Bitcoin, it's very difficult, and for cryptocurrency in general. And security, this is another feature. If you lose that private key, you lose access to your funds. So if you can't access your wallet using this private key, then, you lose your funds. So there's actually a big portion of Bitcoin, actually, I think it's in wallets that cannot be accessed because someone lost their private key. Maybe they had, 500 Bitcoin, a lot of money, bought way back in 2017 maybe, but they can't access it. So the private keys in cryptocurrency is like a master password to your digital wallet. It is what gives you full control over your digital assets. So these are just some of the key features, just to try and understand the cryptocurrency space. So like I mentioned, it's very volatile. As an investment avenue, not many people recommend this as an investment. And if you do decide to invest in some of the digital assets, such as Bitcoin, then you need to be very aware that it's very volatile. So you need to be very happy that next day or next week, you've lost half of your investments. And you need to be happy that probably next year you'll double. So it's very, very volatile. That's a key feature that we need to consider. But with this volatility, at least for now, there's been high return. So investors who invested here have had high return. I think last year when Donald Trump went into office, it was at around $70,000 thereabout, or below that. Right now it's trading at 110. Maybe a month ago it was at 120,000. So it just tells you the volatility that is there. But it does give you diversification, and it is, like I mentioned, decentralized. So no one has more or less control. No one can come and claim your asset. The risks are, it's very volatile, it's speculative in nature. There is no regulatory framework currently, and also security sits with you more or less. So if you lose, you don't take responsibility of your security, you can lose your digital assets. So that was just a short introduction of cryptocurrency. I didn't want to go into deep detail because this is a very broad field. But just to summarize, cryptocurrencies are basically a type of digital or virtual currency. It is very popular because the price has been moving, or the returns have been quite attractive over the years. That's the popularity. But as an investment, they are very volatile. If you have a significant enough portfolio to, like we said, number one, diversify your investment. So if you can invest in different areas for certain investments, then you get the benefit of a blended return. So if maybe crypto doesn't do too well, at least you can rely on such as infrastructure bonds when things are not very good. So there's no good or bad investment. What I'd say is understand what you're investing in, understand the type of risk that you can take. Risk management is also very important. And you can use all these investments as tools to build your financial portfolio and for overall financial wealth. So for me, just a takeaway and a call to action. Of course, being Britam, of course, we do have certain solutions that we present to clients. So we want for you to consider as tools in your financial well-being, in your portfolio, in your wealth planning journey and wealth building journey. Short-term securities that give you stable returns that are secure, whether it's to build an emergency fund that you can access very quickly, or whether to build up capacity to invest in other opportunities, such as for infrastructure bonds, like has been mentioned, the minimum investment is 50,000. So, and they are not issued every day, of course. This year, I think we've only had last month being issued. So if you want a place other than a bank to park your money so that you can invest it in other opportunities or other plans, whether it's to buy a land or buy a car or just for your emergency fund, then you can consider such funds. So what are the features of this fund? Number one, there are no restrictions for entry or exit for the money market fund. So you can just invest whenever you want. So it's, instead of putting your money in a bank account, then you can consider such investments. And the positive thing is we also have an app where you can sign up, track your investments. We are glad that we are joined by Esther, who can also talk to you about more features. Number two, no fixed lock-in period. So like I mentioned, you can invest if you want your money after 2 months. If you wanted to do a project, you can, instead of putting your money in a bank, you can put it there. Maybe when the project comes due, you need to pay, access your money. And within that period, at least you've earned some income instead of having it sitting in your account. It offers capital stability and low risk. It is a short-term investment security, ideally. So it's important to know that interest rates fluctuate daily. We do invest in some of these securities that have been mentioned. We are heavily regulated, so it's very defined where you invest your funds. We can't invest in very long-term investments or investments that are volatile in nature. So that gives you a bit of comfort in terms of your capital. It's highly liquid. I'm glad that the story of charges came up. Underlying the rate, there is a fund management charge that is charged, 1 to 2%. but the rate that we give is usually net of any fees, but gross of tax. So, for example, on 4th September, we published 10.82%, so that's already net of fees. Then it's targeted to achieve a reasonable level of current income that beats inflation and outperforms bank savings and current accounts. We've had investors who've approached us and said they want relatively moderate to long-term investment, and this is where the Bond Plus fund comes in. It usually has a relatively high return compared to a money market fund. So as of 4th September, we published around 11.6% per annum in terms of return. It has more or less similar features to a money market fund, but the focus for this fund is more medium to long-term investment, but you can still access your funds whenever you please in this fund, but it gives you a relatively higher return, but the features are more or less similar. But let me just give you a breakdown of the differences between these two funds. All of them, money market fund is low risk, Bond Plus is low to medium risk. Both of them are liquid. Potential returns, Bond Plus funds, you can get relatively higher returns. For money market fund, it's best for short-term goals. If you have medium-term goals, then you can consider the Bond Plus fund. And the minimum amounts are 1,000 shillings for the money market fund and 5,000 for the Bond Plus fund. So you can consider these funds in case you want to build or maintain a savings fund or an emergency fund instead of having your money seated in your account. So with that, I want to thank you very much for the session. It's been a very engaging session, and I'm glad that people are very keen. I'm very glad about the turnout and the way it's been very well organized. The sponsors and the organizers have done a very good job. At your breakfast, I'm sure the lunch will be very, very good. And I'm very glad. I'm glad because of the engagements we've had, and I hope you've found this one or two useful things that you can use in your financial plan and your financial journey. And our hope is that you can use these tools so that you can have financial wellness and build your wealth and be, in a very good position. So, asanteni sana, and thank you very much.